Hello, everyone. So it's a great pleasure to be back today and to have the opening panel this morning. So I would like first to, of course, have our panelists introduce themselves, tell us where they are coming from, where they are going, and also what your companies are doing.
Sure. Hi, my name is Adam Fileski. I'm the co-founder of Portage. Before Portage, I had my own business, starting one of the first exchange trade fund businesses in Canada back in 2005. But for the last 8 years, I've been building our platform, which is a early stage seed all the way to Series C, fintech focused venture investor. We invest primarily in North America and Europe. We have about 90 companies now in the portfolio. And then more recently, we've just added a growth envelope so we can go all the way to pre-IPO.
Thank you, Adam. What about you, Saif?
First, thanks for having me, Elodie. We're Thunder. We allow our users to invest in stocks and mutual funds in Egypt as well as stocks in the US. We've been around for 3 years now, and so far we've managed to capture 25% of the transactions that happen on the exchange. And we've contributed to 86% of all the investors entering into the space in Egypt. Our general vision is to provide economic opportunity across the MENA region, and we're actually working with the ADGM regulator to hopefully have the UAE as our first expansion market.
So we've been talking in the last days, about this topic, like reset in the funding in the investment market, changing world, or is it only a correction? So I have the same question for both of you, and maybe we can start with Adam. What is your vision and on this? How do you think severity is? When do you think we'll get out of it? What are the opportunities, especially for our region in the Middle East, for that crisis?
So look, we're actually relatively optimistic. The U.S. seems to have bottomed in Q2. In Q3, we actually started seeing valuations in seed and Series A actually increasing. It's been more challenging and more difficult in later stage, and it's purely for the fact that there hasn't been any deals done per se, a few, but the N is probably in 2023 less than 40. So having a really good idea of where the later stage market is a little more challenging. In Europe, we're also seeing the early stage starting to recover, but it didn't go up as high either. So Europe's always kind of funny, caught in the middle. In EM, obviously, it really is regional, whether it's Latin America, whether it's Asia, whether it's here. I think in general, we've seen early stage valuations be relatively robust. And I think that's partly because a lot of capital was raised at the heights, and a lot of that capital's come down market, and which has allowed those valuations to be maintained. Although I think it's going to be a challenge to see which of those earlier stage companies can live up to those valuations. And I think we're already starting to see in this, call it Series B, C market in North America and Europe, that a really good financing is achieving your previous post money. And so if you think about multiples of compressed, depending on stage, somewhere between 60 and 40%, you have to have grown about 50% per year to get to your previous post money. And so I think people should celebrate if they get their last valuation. And of course, there's always that top decile that will exceed those expectations.
And what opportunities do you see specifically for Abu Dhabi and for the Middle East?
So, look, I think what's exciting about this region is there's a really robust angel and seed activity. So there's, for the size of the market, what's impressed us is the amount of flow and companies. I think the question for us is, when would we enter the market, when and where would we make an investment? I think for us, the opportunity is probably Series A and B, where we can be more of a facilitator and not compete with the local market. And so that's what we're trying to assess right now.
So maybe you have your next investment by your side. So, Saif, what about yourself? It will be very interesting, to have the opinion of an entrepreneur on that.
So it's tough. Like we can say that it's tough. Like from the conversations that we're having, I think there is money. I think there's some dry powder, and there is appetite to put this dry powder somewhere. I think what's making it a little bit tough is that it happened when this region was actually starting to grow, and there was still a lot of investors still exploring this region. And now you're competing with other regions that are already developed in terms of the startup ecosystem, capital markets that have similar IRRs to what VCs would expect with this level of risk. But also, to be honest, we're seeing the opportunity in this opportunity in terms of less competition entering into the market. Everyone is focused on their own specific area, but also opportunity in terms of data points. So obviously, Adam would know much more, but from our conversations with VCs, we feel that the more data points that they have on you, the more likely they are to have the appetite to venture into you. And being able to survive or even grow within the foundations and within the elements that are happening now, this is an additional data point that proves resilience, that proves that there is a very big push. And I think those that come out of this are actually in a better poised position versus those that are entering for the first time after things start to go back up again.
Can you be a little bit more precise and also share with the audience, what was your fundraising journey within the funder, and how did you manage, to grow from Egypt, go to the US, come back to the Middle East, and now Abu Dhabi?
Yeah, so we did three rounds in total. I honestly think our first round was the toughest round. We did it back in 2019.
It's always the poker game now.
Yes. So back in 2019, both Hamouda and myself, we both come from Uber. So we both come from the ride hailing industry. The first two questions were, what are you guys doing in fintech? And why would you start in Egypt? And at that point, it's more of the vision, the dream, and like what we wanted to do versus any data points that can really support this. And coming from this region, like how low data points are in general. So you might imagine how startups would be. I think first round was $800,000, and like we barely scraped through, and it took 4 months of like lobbying all across the world. And if you look at the cap table, it's just a very weird cap table where you have VCs from all across the world. Second one, we started to have some sort of traction with the license. As you know, in the fintech world, licenses play a very big role, regulations play a very big role. So I wouldn't say it was easy, but it was definitely easier. Third round, this was the Series A of last year. We had Tiger, we had Beko, we had Process and as new entrants. And I think the one thing that differentiated us at that round was the traction that we had. For the first time, we actually had traction to show. And the point that they focused on heavily was unit economics. And I think this was a very big difference to the language that we used to receive back then. In the first two rounds, it was mostly on like growth, how's revenue doing, how's the user base doing. With the different VC arms that we were talking to at different stage, it was okay. Show us the unit economics. Let's just make sure that the money we deploy now is something that will actually have a multiplier effect on the growth of this business, rather than just fueling growth for the next round.
Thank you. Adam, you've been coming several times to the region and to Abu Dhabi, and this time you were bringing with you, a delegation of a dozen of fintech companies from your portfolio. Can you give us more detail about that, and why do you think it's the right time now for you to bring these companies to the region?
I mean, I think you always look for market signals, and as an investor, we're looking for those signals. Paul and I have been coming here for the last 4 years fairly consistently. We, for many people's benefit, did a strategic partnership with ADQ this past July, so that's been a further impetus to be in the region. But what's also interesting, of our 90 companies, we started seeing commercial activity in this region, and that they were starting to put people in the region, but in a more informal way. And so we started double clicking on that, and we really found that we had about 15 companies that were doing real business in the region, 2 of which had opened offices, and 3 of which were exploring to open offices. So for us, that was a pretty good signal that we should invest time and support in terms of what we know about the region, and certainly introducing them to our partners here. So they've been here for 3 days, most of the time spent in commercial conversations, not fundraising conversations. And, we'll explore and see what those opportunities result in. But I'm super optimistic, particularly just how healthy the pipeline was even before they got here.
Thank you. I think it's, I would like to double click on that. Being with now Adio and before with Hub 71, we are seeing a lot of companies coming our way, who doesn't know the region and just think that it will take them a couple of flights, to be able to come here and to fundraise. So that's part of the guidance we are giving them, like you need to be committed to building this economic ecosystem with us. You need to be committed to first get traction and make business in the UAE and Abu Dhabi, and that's where you will see after, the support of the investment ecosystem that we have in the country. When we were discussing yesterday, Adam, we were discussing, but the maturity of the different stage in the UAE that we started, especially, around the Series A, with now a very strong, investment ecosystem and also network of companies to invest in that level of maturity. That the business angel and pre-seed seed side is growing slowly but growing, but we are still working on building, the growth and the exit vision, which is of course critical for investors, because if you don't have like an idea of what will be your exit from the beginning, it makes the investment more difficult. So what is your vision on that? And you've been here several times, as we were saying, and what do you think should be done, or how can you support also that trend?
So it's just going to take time is the honest answer, because the ecosystem has to mature, grow up, see successes, and recycle, and that recycling part means founders that were successful get refunded, and it's a reinforcing circle, if you will. But certainly at ICs, for any North American, European investor, they're going to be asking that question: is what is the exit path? So from our perspective, we believe the most obvious exit path are probably international companies looking to increase their total addressable market in a similar business. So your business could be potentially acquired by a North American platform or a European platform doing something similar, and there's great synergies in doing that. So that's a potential path. I think, you know, incumbents, whether they see the fintech community as a way to accelerate whatever innovation they're doing. I don't think we've seen a whole lot of signs of that thus far, but we're looking to see that type of activity. And then lastly, of course, the final signal that you've got a really strong ecosystem is if you've got a liquid public market. We're just closing investment in Turkey as an example, which is an outliner for us. But the health of that IPO market in Turkey actually gives you a lot of confidence, despite the multiples maybe being lower than you would see in a developed market. If you're investing quite early, so long as the growth is there, you can deal with multiple compression. But it's a really liquid market, so I think that's really important in the evolution of this market. Is we see the development of IPOs, etc.
I think this is a very critical point, the liquidity of the market. And I just wanted to mention that of course ADX, is working on it. And also as part of ADIO, Abu Dhabi Investment Office, we have the IPO fund. So it's been launched to be able on one side, to support the companies which are pre-IPO 2 to 3 years from becoming IPO in Abu Dhabi, and also an advisory arm who are helping, and prepping the companies that we think we are ready to do the last mile. So, Saif, what about yourself? What is the exit strategy of Thunder? Do you have already one? And how do you see it happening in Abu Dhabi?
Yeah. So I'll circle back on what Adam said here. So the three things that we see as well are similar to how Adam sees it. Either someone acquiring us from outside, either an incumbent actually expanding to their digital forte through us or through the public markets. Let me start with the public markets. I think Thunder is very intertwined with public markets. So like the ideal story would be that we IPO one day. Two things there. One, I don't think an IPO is an exit for founders, at least, and I think it's even more hassle and it's even more work. I think it's an opportunity to allow for exits of those who backed you up earlier, as well as to provide the options for users to actually be part of your story. And this brings me to the point where I see that the right IPO structure needs to be a local or regional IPO structure. And I don't think if we decide, like if you look at all the liquid markets globally, I think the US is top of the chain. but I don't think it really works for companies like us. I don't have any brand presence in the US. I don't really have a user base in the US. I don't think I can get this premium of being in the US market, especially that a lot of US based firms would prefer to invest in US based opportunities, and it is with their mandate. For this to happen, we need to do a very strong push on the liquidity of local markets and the sophistication of investors participating in the local markets, which is something that is very close to Thunder's mission as well. On the other 2 points, I think in terms of someone from outside coming to acquire you or to invest in you, it's not really within your hands on when they would see this opportunity, but I think it's within your hands on the structure that you have that would allow for such a thing to happen in the future. Think of corporate governance, think of the numbers, think of the strategic sense on why you would appeal to someone like that. On the incumbents part, I actually see a lot of potential activity, and I see it actually being focused heavily in the UAE. I think when I look at the UAE, I think there's more appetite of incumbents to actually participate in these growth stories. You just saw Ian and the Kareem story, and I think it pushes a very positive, and it comes from the places that you wouldn't expect it. You know, Ian historically was not in the sector at all, and you see them actually making a very big push there. So it doesn't necessarily have to be traditional banks or traditional brokerages. You actually have a lot of opportunities and appetite here, and I think the leadership, whether it's coming from the government or from these corporates, are in a good stage where they're thinking of these things and they're making a big push on understanding these ecosystems and being part of that.
I think that's a very important point. You know, when we look, and we've been like, you know, trying to crack that at Hub to be able to build the ecosystem. It's like when you look at the other mature ecosystem, you know, they've been growing organically. The point is that in the UAE, we started our journey 6 years ago with a vision from the leadership. And what is quite very exciting now is that we can see, you know, that this kind of mayonnaise is coming, where we see, as you were saying, you know, people who were part of the senior management as yourself, you know, of success story, exiting, being able to launch their own ventures and bringing that experience with them. And on the other side, you know, not only sovereign wealth funds, but also big corporates who are moving toward their digital transformation journey, and instead of trying to reinvent everything and to rebuild everything, are trying to leverage, you know, some smaller player and see how they can benefit from them with a potential exit at the end. So I think we're coming toward the end of this panel. So I will have this very, you know, like general question for both of you. What are your 2 cents of advice, you know, for a fintech founder who wants to launch his venture in 2024? What will be your recommendation? Adam?
So I think Safe talked about unit economics and just being really tight on all of your metrics, and effectively have a living data room, because you're in this type of environment should always be fundraising, and those conversations shouldn't be a distraction. So everything should be ready at the end of every month. Every metric that any investors ever asked you is updated automatically, so your narrative is very crisp and you can tell a story in 5-10 minutes that's very compelling. You no longer have the time to engage in a conversation over 30-45 days to really seduce them. There's just too scarce of capital, and people are very busy looking at a lot of things. The quicker you can get them on the hook, the better, and then that comes with being really, really prepared.
So that's coming back to measure what matters, right? What about yourself?
I'll give a few if I may.
Sure.
First one, at least from our story, when we were in the early stages, when we were talking to international investors, we found it very difficult to talk about. And like, it's a new region for them. They don't know a lot of these things that really have the cultural sense of things here. And what we found easier is to bring well-known, very reputable VCs from this region, like Beko, like Global Ventures. They have a very good reach, and they help you narrate your story with their partner VCs abroad, and it makes it easier for the partner VCs abroad to actually come into something with someone that they trust. I'd say this is number one. Number two, when talking to international VCs, I think you'd find that a lot of them are actually focused on specific sectors. Like, I know Portage is very strong on the fintech piece, and these conversations are much faster if they're overlapping with what you're doing. You'll find them asking the right questions, you'll find them understanding what you're doing, and you'll find that even if it comes to rejection, they actually tell you the reasons why they rejected you and what you need to do as a next step. And then the third one I want to say is, from the numbers perspective, I'll actually give you the numbers that I like to look at personally on the unit economics front. So one, revenue growth is important. A big charm of the startups is that you can do a lot in very short time. So revenue growth, I think, will always be relevant. I also like to look at CAC payback period. Anything below 6 months, I think is really good. I like to look at a retention scheme. In Thunder, we look at net deposits. So if, let's say, the cumulative ecosystem put a million Egyptian pounds in our platform in month 1, how does month 12 look like? Is it growing? Is it the same? Is it going down? And then the last thing I like to look at is basically your burn multiple. If a VC comes and puts money in you today, are you having this multiplier effect on revenue or not? And I think having a good sound of these numbers makes it easier to have the conversations with VCs.
Thank you. So coming back to your first advice, I will do a little bit of self-promotion here around Up 71. That's exactly what we've been trying to build, is to build that community, where people are able to support you and to make sure that, the point of fundraising is not, doesn't take a 24 hours at a demo day. That's not how it works especially in our region. So to be able to have the future investors being your advisor from the beginning, will be able to fast track that journey and be able to do the right matchmaking.
One last point I think super important for a younger region is failure is really important.
And it's fine.
And it's absolutely fine. And you should celebrate the entrepreneurs that fail, get up and start the next company. And I think too often in many countries, including my own, Canada, failure isn't looked as a successful effort of energy like it is in the United States. That entrepreneur is celebrated for trying and failing and getting back up and starting again. I think in a new region like this, we got to make sure we're attuned to that, because there will be some failures. There'll be some spectacular failures. In Canada, the 01 crisis, we lost Nortel, which is a multi-billion-dollar business. Then we lost BlackBerry. All of those engineers and entrepreneurs went on to build some of the best companies in our country. So I just keep that in mind.
Well, thank you so much for that last point. Well, I really enjoyed the conversation. Thank you for coming today, and I hope you will enjoy the following conversation later today. Thank you.
Thank you.